as we've been talking about, this rush to a spot ETF that really has provided a boost for Bitcoin and other digital asset prices, but not so much today. Bitcoin down about 0.5%. We're still north of $30,000, but of course, this is part of a broader sell-off we are seeing in riskier assets.
The real test is going to be, can stocks withstand a period of higher interest rates again?
Do you think we're nearing the end of this tightening cycle?
The digital currency experienced both surges and dips, testing the nerves of its holders over the past month as various developments in the space put the digital asset's price into a pull and push trend. However, investors did not let the price swings deter them from accumulating more Bitcoin. Well, in today's video, Michael Saylor has shared his viewpoint on the crypto market. He has discussed why Bitcoin is the future. For more details, be sure to stay till the end of the video. And if you want to stay up to date with the latest crypto insights, markets, and economy, make sure to hit that subscribe button and the bell icon. All right, are you ready? Let's dive right in.
If we switch the focus just to the crypto industry as opposed to macroeconomics, and the last macroeconomic observation is that, interest rates did go to zero. They stayed at zero for 18 months. Then they got jacked up to 500 basis points in 12 months. It started breaking the banks. It really crimped the commercial real estate industry, the residential real estate industry. It squeezed the equity markets. And now we're kind of like at this point where it's not clear, do they creep up a little bit or the interest rates to come back in? But I think we're at the end of that aggressive tightening cycle. And at some point, they're going to have to loosen monetary policy. So we're poised there. In the crypto industry, I think in general, the question is Bitcoin going to be banned, hacked, or copied? Right? It was the biggest crypto asset 3 years ago, but will it be banned? Will it be hacked? Will it be copied? That's the question for any investor. What happens next? There used to be a lot of Bitcoin skeptics. There were, there were the deniers. I talk about them. People that think Bitcoin is tulip bulbs and a Ponzi scheme. Peter Schiff being the most famous. The deniers are pretty much silenced now, right? I mean, they have fallen out of consensus. Bloomberg, New York Times, Wall Street Journal, CNBC, Congress, the SEC, the CFTC, the Treasury, all the central banks of the world, they all kind of acknowledge it's not tulip bulbs. It's a real asset. It's a digital commodity. So the deniers are out of the mainstream. Then you have the skeptics, like Bitcoin is a really good idea, but it's too good idea, so the government's going to ban it. And we had, Jamie Dimon said it, you've got other people that said it, Larry Fink once said, it's an index of money laundering. So the skeptics held the day for a while. But I think in the last 24 to 36 months, the skeptics have kind of fallen out of the mainstream as well, because you can't with a straight face go on CNBC and say Bitcoin's going to be banned when they've got the ticker in the lower right corner, and they got the head of the SEC, the head of the CFTC, and the Secretary of the Treasury, and then Jerome Powell all saying, I think it's going to be around for a while. It's a real thing.
But before we dive into the details, we have some exciting news for you. This week, we'll be doing a free live Q&A with Samuel Plesnick, our master trading coach. He'll be answering all your burning questions about crypto, trading, and investing. Here's a message from him.
My name is Samuel Plesnick. I've been managing 2 crypto funds, and I've been also a market maker in top 10 crypto exchange. I would love to invite you to our special Q&A session with me, which is going to be Thursday, July 20th at 11 a.m. Eastern Standard Time. I will be sharing my strategies there. I will be sharing there what does it take to become a successful full-time trader. And I will be also answering your questions that you might have about trading. Click on the link below. Join me on our Q&A session on Thursday. So looking forward to talking to you. Ciao.
While interest rates soared and crashed, affecting various sectors of the economy, Bitcoin and other cryptocurrencies remained relatively stable. You see, Bitcoin and Ethereum, the 2 largest cryptocurrencies by market value, have been on a roll lately, reaching new highs for the year. Bitcoin broke above $31,500, while Ethereum approached $2,000 per coin. However, the rally was short-lived, as both coins faced resistance and correction. Bitcoin dropped below $30,000, while Ethereum slid below $1,800. Some altcoins have enjoyed the spillover effects of the crypto giants' rally, but the overall market has been erratic and uncertain. The crypto market seems to mirror the U.S. stock market, S&P 500 and NASDAQ 100, which had to give up their gains after a strong first half of the week. The stock indices were debased following the release of inconsistent labor market data. Let's get into the next clip to hear more from Michael Saylor. But be sure to give a big thumbs up to this video before jumping ahead.
Skeptics don't really have much power. So now if it's an asset, you've got a bunch of investors and, maybe you love it, maybe you hate it. You're like, if you're an investor, you acknowledge it as an asset class and you can either go long, go short, or trade the volatility. I think that you've seen a lot more investors coming into this space. And for a while, they thought it was correlated to risk assets, and so they would short it to hedge their risk portfolio, right? And then they thought it was not correlated or negatively correlated, and so that view has evolved over time. But to your point, the best thing that could happen to Bitcoin is the volatility decreases a bit, but the correlations break down, because if it's an uncorrelated asset and it's a legitimate asset, then most of the financial world is underexposed, right? You've got $500 trillion of liquid financial assets floating around, and 0.1% of that is Bitcoin. So if it gets to be 1%, right, 2%, then it's going up by a factor of 10 or more. I think we'll get the uncorrelated, and how much volatility we get, it's unclear. But as more people adopt it, and as liquidity increases in the mainstream institutional investor market, I think the volatility will decrease and is decreasing. I mean, the last two investor classes are the technocrats. And this is a set of investors you want. They're the people that think Apple and Google and Amazon and Facebook and Microsoft are really powerful networks. And you can see the big winning stock ideas have been Microsoft, Apple, and Google. And the reason why is because they're more powerful than most nation states. It should be pretty clear to people right now that Apple has 1 billion users, and it would be easier for you to leave the United States of America and pick up your life elsewhere than it would be for you to leave the Apple ecosystem. And it's a very interesting idea, but if you're a tech investor, you could get behind that idea, and eventually just about everybody that got insanely wealthy over the past 20 or 30 years was a technocrat, really, if you think about it. And then eventually you get the Warren Buffetts and you get the Carl Icahns of the world that say, I don't know if I understand it, but it seems like a juggernaut, so I guess I'll buy $10 billion of it. And Warren Buffett made more money on Apple stock than he made in his entire life on everything else you've ever heard of. And he made that money faster. And so the technocrat, kind of wins over the mainstream investor. And Bitcoin is emerging as this dominant digital monetary network, or dominant digital commodity network, or you could call it dominant digital property network.
Bitcoin has overcome many obstacles and gained the respect of many investors. It is no longer seen as a fad or a threat, but as a valuable asset that can offer returns and diversification. During this second trading week in July, the Federal Reserve will also make a statement about their evaluation of the nation's economic situation and the future direction of their monetary policy, which will affect Bitcoin and the overall market. Bitcoin's fate will depend on how well it adjusts to the changing conditions and how it tackles the new challenges and opportunities. Now, it's time for your thoughts. Will Bitcoin break 31K and go to 35K? Or can we see Bitcoin falling under the 30K level? And what will be the Fed's next decision regarding a rate hike? Let me know your thoughts in the comments below. And don't forget to subscribe to my channel for more updates on crypto and economy. Also, be sure to give a big thumbs up to this video. Thanks for watching, and see you next time. Adios.